Hi everybody, we're now looking at Naspers and we are on the monthly chart, and in regards to the monthly chart of Naspers we can see that the market had given us a very nice W structure at this point, which has a neckline at that level. And guys, by now you know that whenever we have W structures, we want to see price break into the upside of that neckline, coming back to the neckline to test it. And at this point where the neckline is where we would look for potential buying opportunities. So similarly guys, now that price has broken above that neckline, in the future we want to see the market head down to the neckline to test it, and if it does so, at this point is where we would look for potential buying opportunities. And I believe that our take profit should be around this level over here. And why do I say that level? That is because if you look at this level over here, it's a very strong level of resistance, as we've had multiple rejections at that level, as you guys can see. And in the future we might potentially see the market reject at this level as well, only to retrace a bit, right? So another thing is that a lot of institutions, like banks and insurers and so forth, actually trade based rather on these type of formations, and a lot of them will be actually waiting for the market to head down to around this level. And that is because this level is also a very strong level of support, right? So they're waiting for the market to get to this level, and at this level is where they would look for those buying opportunities, and many of them will take profit more or less at that level also, right? Anyway, from here what I'm gonna do is head down to the weekly chart. However, before I do so, I just want to point out also that if you look at this area over here, we have what seems to be a gap, and gaps actually represent liquidity, because there's a lot of money sitting at that point, and the market usually goes to where the money is sitting. And I believe that, as I've said guys, the market is likely to push further down, and not only to test this neckline over here of this W structure, but also to grab the liquidity that's sitting in and around that gap, right? Anyway, before you proceed guys, I just want to add a neckline for that W structure, and just bear with me guys. Another thing that I also want to point out is that necklines are not actual lines, but rather areas. And we could say that more or less this whole area over here, right, is the neckline of this overextended W structure. Can you guys see that? I hope what I'm saying makes sense. Anyway, from here what I'm going to do is head down to the weekly chart, and here we are on the weekly chart. And remember guys, on the monthly chart we spoke about how we have this W structure and a neckline at that point, and we're just waiting for the market to hit to this level, and at this level is where we would look for those potential buying opportunities, right? So what else do we see guys? Another thing that I see that is also very much interesting guys is that we have this candlestick over here. It is a bearish candlestick with a small body and quite a long lower wick, and what it tells us guys is that that candlestick is actually a liquidity candlestick, as it's carrying a lot of liquidity at that level where it ends more or less. And the market guys, as I've said, will always go to where the liquidity is, as liquidity actually represents money that needs to be triggered by the market at one point or another. So as much as guys we have this W structure with a neckline at that point, and I said that we might potentially see price come to the neckline to test it, and at this point push further up, what may actually happen is that the market may come all the way down, right, to this level over here, where we have the candlestick that's carrying all of that liquidity, and only bounce off of this level and push further up, right? That's also a possibility as well that we need to keep in the back of our minds, right? So as much as we have this candlestick over here, which is a liquidity candlestick, we have another one at this point. It is a bearish candlestick with a small body and quite a long lower wick, and it too is carrying a lot of money at that point. And in the future we will see price indeed coming down to this level to grab that liquidity. However guys, having said all that, my bias at this point in time is for price to head back to this level, and at this level we're likely to see the market push further up. As I've said guys, we might actually see it push even further down to around this level, to grab that liquidity, only to push further up, right? Anyway, let's proceed, guys. So what I'm going to do from here is head down to the daily chart. However, before I do so, let me just also point out that at this point over here, we have that candlestick, which is a bullish candlestick with a relatively small body and quite a long upper wick. And what that candlestick also tells us is that there's a lot of money actually sitting at this level over here, and it also tells us that there is scope for the market to push further up, right? So what we may possibly see is that the market may push all the way to this level, and maybe again this level over here, and then push further up to grab the liquidity at that point as well. Can you guys see that? I just hope what I'm saying makes sense. Anyway, from here, what I'm gonna do is head down to the daily chart. Just bear with me, and here we are on the daily chart. And the first thing that I'm going to do, guys, in regards to the daily chart is to add my daily channel. Let's have a look. How would I add my daily channel at this point? I would add my daily channel in this manner. Just bear with me, guys. And just remember that whatever drawings that we add to our charts need to be as accurate as can be, just to ensure that ultimately when we do execute, our execution is also very much perfect. So just bear with me, guys. Let's see. So we could say that this is our daily chart, or rather our daily channel, more or less, right? So just to recap, guys, remember we spoke about on the bigger time frames how we have this W structure which has a neckline at that point, and we said that price had broken to the upside of that neckline, and we're just waiting for the market to head down to this level again where we have that neckline of this W structure. And at this point is where we would look for those potential buying opportunities. Having said that, just bear in mind that we have that candlestick at this point that is carrying all of that liquidity, and that we might actually see price move all the way to this level only to move further up, right? Anyway, let's proceed, guys. Now that we are on the daily chart, what else do we see? On the daily chart, guys, we can see that the market had given us a very nice overextended M structure over here, which has a neckline at that point. It's an overextended M structure because actually that first leg of the M, which is over here, is much higher than that second leg, and it has a neckline more or less at that point, guys. And we can see that price has broken the neckline to the bottom side over here, right? And what this means is that should the market head all the way up to this level again, which is where we have that neckline, at this level is where we should be looking for those selling opportunities, and our take profit should be around this area over here where we have the neckline of that W structure that we spoke about. And that is because not only is the neckline of this W structure a very important area, just bear in mind that it's also a very strong level of support, right? It's a very strong level of support, and as I've said, a lot of buyers will be coming in at that point, and especially institutional buyers, right? Anyway, let's proceed, guys. In fact, before we go on, I just want to add my neckline to that M structure. So there we go. So we could say that this is the neckline, and just remember, guys, that necklines are areas and not so much actual lines, right? So that's the neckline of this M structure, and as I've said, we saw price actually breaking the neckline at this point, coming back to the neckline to test it, and then pushing further down. Should price from where it is push again to this level, at this level is where we would look for further selling opportunities, and that is because not only is this level the neckline of this M structure, it's also now a very strong level of resistance, and that is because we've had multiple rejections at that point, right? And in the future we might get another rejection at that point, right? And just remember that if we do indeed find a selling opportunity at this point, our take profit should be this level over here where we have that neckline of that huge W structure that we spoke about, right? Anyway, let's proceed, guys. Another thing that confirms that, guys, chances are that the market is going to move down to around this area is the fact that we have this channel which has also been broken at this point, right? The channel has been broken at this point, and it serves as further confluence and confirmation that chances are the market will move further down to around that level, right? So if you're looking to buy Naspers, I would say rather wait for the market to reach this level, which is the neckline, as I've said, guys, of that huge W structure. And at this point is where you should possibly look for those buying opportunities, and keeping in mind that we also have that one candlestick that's sitting at this point that is carrying all of that liquidity, and we might also want to buy again at this point, right? Anyway, let's proceed. So from here, what I'm going to do is head down to the H4 chart. However, before I do so, I just want to mention also that we have these gaps over here. Can you guys see that we have gaps at this point? We have another gap there. Let's see, where else do we have gaps? For now, I can just see only those 2 points. And guys, these gaps are areas where we have a lot of liquidity, right? And they are telling us that there's a lot of money sitting at that point. And as much as I'm saying that at this level is where we should be looking for those buying opportunities, just also bear in mind that the market may actually push all the way down to these gaps, right? Because there's a lot of money sitting at that point, and all these gaps need to be filled by the market, as there is a lot of money sitting at that point, right? So that is it, guys. And as far as my analysis, I just hope it makes sense, and just remember to like the content, and if you have any further questions, just let me know, and peace out.